Hello, I am Wael Yahya, Certified Financial Technician Expert from the International Federation of Technical Analysts. In this video, we will update our classical technical analysis over the S&P 500 index. First of all, we will start with the major structure over the monthly chart. We can notice that on April we had a great selling pressure and full control of the sellers, and I may consider it a black Marupuzo Japanese candlestick, and it was on a relatively above average volume. It was not on low volume such as these candles. It was relatively higher, and on the monthly chart we can see that this extended uptrend had reached a buying overbought condition, and now we are correcting to the downside. This is concerning the long-term picture. This is concerning the major structure. We are suffering from sellers' control, full control, at least until now. Over the weekly chart, we will check the long and the medium term picture, and here we should have a little bit discussion. We are having here a neckline for a completed pattern over the weekly chart. We can see we do have head and shoulders, which is well broken to the downside, and the breakout is confirmed. So if we want to know the minimum target of this pattern, I think it's around 600 points. If we subtract it from 4,250, which was the level of the break, I think we should go to 3,600, I think so, or 3,700. These are the minimum targets, approximately, of course, and the uptrend, which used to be, is no more available. It's well broken to the downside and tested from the downside and worked as a strong resistance that had led to impulsive wave, a downward impulsive wave. We can also notice that the market starting to make lower highs as well as lower lows. So we do have a well established downtrend over the weekly chart for now. So I think the strategy is on the seller side. We are waiting for corrections to the upside to do some virtual trading on the short selling side. It will be much more logic to bet over the market falling and impulsive waves to the downside. This is considered now a corrective wave, which is considered short term against the prevailing trend, the medium term prevailing trend. So it may stop and vanish around the neckline of the head and shoulders, and it may get a little bit extended to the trend line before it vanishes and an impulsive wave starts pushing the market lower. As we said, the minimum target may range around 3,700 or 3,600 points. Let us see the details, short-term details over the daily chart. We see that there was an impulsive wave to the downside. Now we are in a corrective wave. It may not be very strong corrective wave. It may just end, as I have said before, around 4,250 before it re-establish a new impulsive wave to the downside. If it got extended, this extension, I think it cannot easily penetrate the downtrend line coming from the weekly around the areas of 4,400 up to 4,500 areas. It means a lot of volume. And when we speak about volume, we can see here that this black candle, this falling day, had a very high volume, which means that on reddish days, on black days, on falling days, we still do have increased volume, and selling pressure can appear at any given time. It may appear before the neckline, it may appear at the neckline, it may appear a little bit after the neckline. So we cannot guarantee where the new impulsive downward wave may restart once again. But in general, the market is in a very, very bearish environment over the medium and the long term, and a little bit of correction which should be used to initiate short selling trades if you are virtual trading or you are doing some simulation. You should make benefit of this corrective wave to the upside, and we should keep an eye over the 4,250 to make virtual trades on the falling side, or by maximum maybe 4,500. These are the two levels that we should take care of over the short term to do some virtual trading. And I think the strategy is on the selling side, targeting much lower. So that's it for now. Thank you for watching. Please feel free to like, subscribe, and share. See you soon.